Okay, guys, we're going to try to learn cash budgeting today using this video. Um, we're going to do an ordinary level question from your question packs. That is the 2007 ordinary level cash budgeting question. It's question 7 in your question packs. You want to set up the page like you can see on the screen in front of you with a wide column to the left, 5 monthly columns, and then a total column to the right. And then you want to also read down through the question, all of the details, and the assets, the liabilities, sales and purchases, and then each of the sentences underneath. You can pause the video to do that, and then you can resume when you're ready to go again. So here we go. The very first entry that we're going to put in here is credit sales. Now, credit sales are things which we sell and we do not receive the money until the following month. So why are they called credit sales? Because if we read the first sentence of the question, it says, and I'm talking about underneath the list of sales and purchases, it says all sales are on credit and are paid for 1 month after the sale. So if we look back up at our sales totals, we can see that in January we sell 78,000 worth of goods. However, we will not receive that money until 1 month later, which is in February. Hence, I put 78,000 in February. In February, we sell 84,000. We receive that in March. In March, we sell 96,000. We receive that in April. And in April, we sell 80,000. We receive that in May. This is adding across automatically. Your calculator, of course, will do this for you. I'm just going to go back to January for a moment. What money do we receive in January? Well, we receive the money for things that we sold in the previous month, which is December of the previous year. That information is given to us in the opening assets at the very top of your question, where it says debtors of 36,000. Debtors are people who we have sold to, but they have not paid us as of the 1st of January. But during the month of January, they will, because it's a sale on credit for 1 month. So therefore, that 36,000 goes in there. And then that is the total credit sales completed. There will be other incomes or receipts in the higher level questions, but for the purpose of this ordinary level question, that is us finished with the receipts. We go down to the cash payments, and this is where we look at the second sentence, which is regarding purchases. It says all purchases are on credit, except for 12,000 euro in May, and are paid for 1 month later. All purchases are on credit. What that means is that the things that we buy in a particular month, we do not pay until the following month. So therefore, when we buy in January 54,000, we pay for that in February. And if we buy in February 73, we pay for that in March. And if we buy in March 84, we pay for that in April. And if we buy in April 75,400, we pay for that in May. Actually, in May, we pay for April's purchases, but also there is an exception. The 12,000 euro in May is a cash purchase, which means we pay that immediately when we buy it. So therefore, that is also to be paid in May. So 75 plus 12, actually this is 87,400. That is a 75,400 from April plus 12,000 from May of cash purchases. We need to go back to January again and just do this one. What do we have to pay for in January? We have to pay for the things which we bought in the previous December, which again is in your opening information, and that is 44,600. It's called creditors. Creditors are people who we buy from and then you pay at a later date. That's the credit purchases and a little cash purchase in May as well completed. And then we can proceed on to the third sentence, which is about rent. It says Malloy rents the premises for 18,000 euro per annum, payable monthly. Now we know that that 18,000 euro per annum is for the year, but if you wish to pay that monthly, you have to divide that by 12. 18,000 divided by 12 is 1,500, and that's going to be each month. So that is 1,500 per month. We can Replicate that across there. And that's going to be a total of 7,500. The next sentence is equipment. It says equipment was bought in April for €6,000. Well, that's easy. You just put 6,000 into April, and then 6,000 will be in your total value. And then wages is the next sentence. It says wages are going to be 5,800 per month. So you put 5,800 in each month. I'll replicate this across as well. And for the 5 months, that's a total of 29,000. That is all of our receipts and payments put into the correct rows and into the correct months. And now we're going to do something which is a little bit reminiscent of first year's household budgets. I'm going to bring this down here and I'm going to show you guys what has happened down here. So how do you get net cash? Net cash is, and you can see it on the screen here, B7 minus B12. Net cash is your total cash receipts for this month, which is January 36,000. Take away your total cash payments of 51,900, and that's going to give you a negative net cash of 15,900. And you do that for each month. Here it is a positive because it is 78, take away 61. Here it is a positive. Back to a negative net cash again here because our expenditure in the month of April is a little bit less, sorry, a little bit more than your income. And in May, your income was 80,000 and your expenditure was 94, giving you a minus net cash of 14,700. You can do this for the total column as well. 374 take away 385,500 gives you that 11,500. So the net cash is total receipts minus total payments. Same as we would have had it in first year household budgets. Now the opening cash is given to you in the question. Anything opening comes from the start of the year, and you are told at the start of the year that this company had cash of 10,200. Oh, sorry, put that in the wrong place there. That should be down here. 10,200. I'm just going to rectify that. So that 10,200 goes in here, and it goes in over here in the total column. Why is that? Because the total column is a summary of the previous 5 columns. So therefore the opening cash in the 5 columns is the same as the opening cash in the total column. And then we're going to do something which I would have taught you to do way back in first year, where we're going to take your net cash and add your opening cash together to get your closing cash. If you start January with 10,200, and then during the month you add on another 15, sorry, during the month you make a loss of 15,000. At the end of that month, when you're going to have minus then you're going to end February with 11,000. You're going to start March with that same 11,000. This is 14,700. Hopefully we can see the pattern here now. 14,700 goes up here. You then get this. This is going to be 13,400. You bring this 13,000. Our closing cash for May is minus 1,300. Now, we do not bring that 1,300 up to the opening cash of, because this is not the month of June. It's not the next month. Instead, you already have the opening cash in there. And if you do this sum here, minus 11,500 plus 10,200, you in both places, you know that you've done that process correct. I want you guys to try the 2000 and 9 question, which is very similar. Put the solution up for you. And then when we're ready, we'll have a look at an a higher level question after. Okay, thank you.